Good morning, folks. This is Billy Trout with the Taxpayer Education Section and Taxpayer Services at your good old Department of Revenue. And on behalf of our Commissioner, David Geragino, and our staff in Taxpayer Services in our department, we welcome you to today's presentation of tax issues for automobile dealers. And there's quite a few of you out there, and it is a hot topic, especially this time of year. I want to welcome Katie, who will be walking us through the presentation today, doing most of that. And of course, our Assistant Director, Dan, is with us today as well. I want to introduce you real quickly to a few other staff members. We have Will Binkley, who is a staff attorney with our Special Investigations section. We also have Miranda Kelton, the Communications Manager in our Vehicle Services Office, as well as Anna Stovall, who is a field auditor for the Department of Revenue. So on behalf of my coworkers, I want to welcome all of you to today's presentation. So with that, we just want to call to your attention a couple of housekeeping things. We do have a PDF of this presentation available on our website. We've put that in the chat and we'll post it again for any of those that are late arrivals, I guess you could say. And then also we'll have a recording of this presentation posted to our website either later today or tomorrow. So with that, I'll go ahead and be quiet for a minute and let Katie take over and go through a few more logistics, and then we'll begin the presentation. Thank you very much.
All right, thanks, Billy. Thanks to our panel for being with us today. I'm excited to have this webinar. I used to work in our Vehicle Services Division where Miranda is, and moving over to Taxpayer Services, it never fails to fascinate me how intricate the laws are regarding car dealerships and title and registration in this state. Lots to go over with you. I'm glad to be having this. As Billy said, we do have a PDF of this presentation that's on our website now. Dan just put it into the chat. You can get to it by going to tn.gov/revenue and clicking on tax webinars, or taxpayer education, I'm sorry, and then tax webinars. That's also where you'll see a recording of this presentation tomorrow. Throughout the webinar, you'll see some links, some hyperlinks like you see on the slide right now. You obviously can't click those directly from the webinar, but if you have the PDF, those are live links for you. So we are going to have the chat closed just while we're going through these slides, and then we'll open up the chat. So hold your questions for about the second half of today's webinar. We will get to your questions. So with that being said, we'll go ahead and move along here. Again, we are talking about tax issues for automobile dealers.
Katie introduces an overview of tax topics affecting car dealerships in and around Tennessee. The slide highlights 3 areas: sales tax, including taxable transactions, repossession credits, and exemptions; business tax, including common issues and deductions; and finally, resources/Q&A.
I was just looking this morning about some stats, some vehicle sales stats in Tennessee. Thought this was interesting from the Alliance for Automotive Innovation. Now, these numbers are for 2022 at this point. Total car sales in Tennessee in 2022, 20.88 billion. That's a lot. Billion. B. According to this Alliance for Automotive Innovation, tax revenue on that percentage of state tax revenue for vehicle sales was 11.43%. Total state tax revenue was 2.29 billion again in 2022. 11.43% of total state tax revenue. Again, those numbers didn't come from us at the Department of Revenue, but that sounds about accurate. That's a big piece of the pie, y'all. That's a huge piece of the pie for the amount of for just one industry contributing that much. So you wonder why we're having this webinar today, why we've created a tax manual just for this industry. There you go. That's why. Car dealerships do have some unique and complex tax issues, from bill of sales that can be, have so many items on them. What's taxable, what's not, people being exempt from tax. These are high dollar items too. A vehicle is a very expensive item, so lots of tax on that. We want to make sure you get it right and can stay in compliance with that if you're a car dealer in Tennessee or a car dealership that's in a surrounding state that sells to Tennessee customers. We're glad to have these resources for you. Today, we're going to be focusing on sales tax and business tax. For sales tax, what's taxable and how is it taxed? We're going to talk about the repossession credit, exemptions. I'm going to talk a little bit about business tax. We'll focus mainly on sales tax, but a little bit about business tax as well. We are going to share some resources with you and then have a little chat here in the second half with our panel here. Very importantly, want to share with you a cool new resource.
Katie advances to a slide titled New Manual by the Tennessee Department of Revenue. The manual is titled Tennessee Automobile Dealership Manual.
We now have a Tennessee Automotive Dealership Tax Manual. If you have the PDF that you're looking at now, you can click on the link there that takes you directly over to our tax manual for this industry specifically. Really excited to have that. So everything we're going over today, you can read more detail about in this tax manual, more examples. There's also going to be, there are also sections in this manual for some franchise and excise tax considerations for this industry and also some title and registration stuff. We ask that you take the opportunity to review this manual. We also want to encourage you to review your records and determine whether any adjustments should be made. If you learn about anything today or in our manual, any adjustments that need to be made to bring you into compliance for past or for future returns. So again, taxpayers who take steps to educate themselves and come into compliance with tax laws are less likely to be a candidate for a full field audit, which nobody wants that, right? So you want to stay in compliance. Field audits can be costly in both time and dollars. So we're putting some resources out there for you. With this being such a tricky industry for tax compliance, we want to do everything we can do to help you.
Katie advances to a slide titled Sales Price Includes. The slide lists items such as the cost of property sold, materials, labor, freight, seller expenses, taxes imposed on the seller, delivery, installation, and documentation fees.
So starting off here, we're going to start off by talking about what does sales price include. Tennessee sales tax generally applies to the selling, leasing, or renting of tangible personal property, or TPP, and selling certain taxable services, amusement software, and digital products specified by the law. Use tax is going to apply to all items otherwise subject to sales tax except for services and amusements on which sales tax has not been paid. So sales and use kind of are combined. An important part of determining how to apply tax is to understand what is included in the sales price and what is not, especially considering how many itemized and non-itemized things are under consideration on a vehicle bill of sale, right? So here's a list here of everything that can be included in sales price. Obviously, cost of the property sold, the cost of materials used for that, labor or service costs, interest, losses, transportation costs, taxes imposed on the seller, any expenses of the seller, anything. Charges for any services necessary to complete the sale. So for vehicles, that could be, prepping the vehicle, washing it down on the inside and out, that kind of thing. Delivery charges, installation charges, documentation fees, all those can be rolled into the sales price. And we're going to talk about single article here in a few slides. It's really important to figure out what is included in that sales price when you're figuring out how that single article applies and how tax in general applies. So we're going to break all this down here in a little bit when we have a real example of a bill of sale and how put the rubber to the road there. What does sales price not include? Discounts or coupons not reimbursed by a third party, separately itemized interest, financing, or carrying charges. Now see that says separately itemized. They can be lumped into, go back a slide here, you see they can be, let me see, I'm looking for my tool that allows me to be able to, my little laser tool. Where is that? Oh, here it is. Okay. Right here, where did that go? Interest, you see that there? That can also be separately itemized out. Separately itemized taxes that are legally imposed on the consumer, and separately itemized credit for used items taken as trade-in.
Katie advances to a slide titled Taxability of Common Items. The slide presents a table showing which common dealership charges are taxable and which are not, including titling fees, document processing fees, services necessary to complete the sale, business tax, financing charges, warranties, and guaranteed auto protection.
Okay, taking things a little further here, we're honing in to some common items that automobile dealerships deal with. Dealers often separately itemize several charges to the customer. So we've got titling fees, not taxable. You see there's a little asterisk there. If you need to zoom in on your screen, I know there's some small print here, but the asterisk there under titling fees says that the amount in excess of actual title and registration fees may be taxable if included in the sales price. So if the title and registration fees are just throwing a number out there, $100, let's say, but the dealership wants to charge more than that, wants to add a little bit into there, the amount in excess may be taxable if that's included in the sales price. Document and processing prep fees, all that taxable. Services necessary to complete the sale, taxable. Business tax, taxable. You see another note there, 2 asterisks. That one says that the dealer may pass along its business tax liability by including a separate charge on the invoice to the customer. It can be rolled into the sales price, though. That's an example of, going back a few slides here, taxes imposed on the seller right here. Going back to the chart here, financing charges and interest, we just talked about that. It depends on if it's itemized or not, whether it's included in the sales price. Extended warranty or service contracts, taxable. This is not subject to single article tax, though. We'll see that broken down in the example we have soon. Charges for gap waivers are not subject to sales and use tax because these charges are not for an enumerated taxable service, and such charges are not included in the vehicle's sales price. So the charges are purely optional and are separately stated from the sales price of the vehicle.
Hey,
You can
Katie.
see, yes,
Hey, could I jump backwards
please
to
do.
extended warranties real quick? There's a notice on our website that talks
Yes.
about extended warranty taxation. And I encourage you guys to look at that because it breaks the stuff down a little bit. It talks about how it's taxed, but it also talks about the fact that warranty covered repairs are not subject to sales tax. So that's the trade-off.
Mm-hmm.
Okay. Also important to know, like Katie says here on her slide, that it's not subject to single article, but it is subject to full local taxation. So it's a
Mm-hmm.
little unusual in our sales tax laws and rules. So with that, there's a special calculation that's made on that. So if you guys need any help on that, let us know about how to make that calculation on extended warranty taxation. Okay.
I just
And
put,
check
thank you
that
for,
notice out because it'll help you.
yeah, I
Okay.
just put a link to that notice in the chat, y'all. So
Okay.
it's
Awesome.
notice, is it notice 1511?
1511. There you go.
Okay,
Thank
here
you.
we go.
Thank you very much.
And you'll see here in a few minutes when we have an example of a bill of sale, how that's separated out and not subject to that single article, but yet still taxable. All right.
Katie advances to a slide titled Rebates, Discounts, Incentives, and Trade-ins. The slide contains 4 subheadings: rebates, discounts, incentive payments, and trade-ins. Katie speaks to these topics.
So rebates, discounts, incentive payments, trade-ins, all very common here. They all reduce the amount charged to the customer, but they're each handled a little bit differently. A rebate does not change the sales price, but the consumer pays less because a portion of the sales price is rebated to the dealer by the manufacturer. Discounts result in a reduction in the sales price. Sales tax applies to the price after the discount is taken. Incentive payments are paid by a manufacturer to a dealer and must be paid pursuant to the program implemented by the manufacturer. There's more information about how it can be pursuant to the program. There's more information on that in the manual if you want to read on that. But under the program, the dealer is required to sell vehicles to purchasers participating in the program at a reduced sales price without the use of manufacturer's coupons or redemption certificates. And the manufacturer is required to pay an amount in money, credit, or otherwise to the dealer that is based on the unit price of the motor vehicle sold. If the incentive payments meet the qualifications, the dealer can take the credit immediately by reducing the sales price of the vehicle by the amount of the incentive payment and only collecting tax, this is the key part, only collecting tax from the purchaser on the reduced amount. Note that, but for this specific credit, these payments would be considered third-party reimbursements of purchaser discounts that would be included in the sales price and thus to the tax. So this provision only applies to sales at retail, not for resale. Important to note there. Let's see here. So when a like item is taken in trade as a credit or partial payment, sales tax should be based on the net difference between the sales price of the item sold and any credit given. Like item there is a key word, like item. Does that mean you can trade in a piece of jewelry for a vehicle? Well, you could, and that could reduce your price, but that would be handled separately in terms of the sales price. It has to be like item to reduce the sales price. So any vessel that can be a camper, that could be a boat, that's considered a like item. It doesn't have to just be car for car, but it can't be a piece of furniture for a car, or a piece of jewelry car, that kind of thing. There are no other general limitations to the trade-in process. There's actually not a requirement that proof be given that tax was previously paid on that item being traded in, whether it was in Tennessee or another state. A trade-in vehicle does not have to be titled in the name of the person trading it in. We've got that question quite a bit. Let's see here. And purchasing a new, it doesn't have to be, let me repeat that. A trade-in vehicle does not have to be titled in the name of the person trading it in and purchasing that new vehicle, but both the owner and the vehicle being traded in and the new owner must be present at the time of the trade-in. The owner of the vehicle must sign the vehicle over to the dealership for the new owner to receive the trade-in credit. A person cannot trade in a vehicle that is not titled or registered. That's another important thing. You've got to have that title for the traded in vehicle. I spoke to our County Clerk Association president recently and asked her, what kind of questions do you get from dealers in your area? What do people get the most confused about? And she said trade-ins. So hopefully that helps you a little bit. The example that we're going to give you here in a couple slides will hopefully help you understand that a little bit better as well.
Katie advances to a slide titled Single Article. The slide includes a graphic of a vehicle and bullet points describing the state sales tax rate, local sales tax rate limitations, and the additional single article tax rate.
All right, single article. Single article means any item of TPP, or tangible personal property, that's commonly understood to be a separate unit or its own standalone unit. We do have a webinar dedicated just to single article tax, and you see a link to it there if you've got the PDF. But with single article, normally with an item of tangible personal property, the entire piece of tangible personal property or unit is taxed at the 7% state rate plus a local rate. In single article, however, the local tax base is limited to only the first 1,600 of the price. So I'm going to kind of break down this slide here. You've got the entire item is subject to the state tax in Tennessee, which is 7%. The first 1,600, just the first 1,600 is subject to the local rate. I have a link here to the local rate lookup. The next 1,600 up to 3,200 is going to be taxed at a special rate. It's called the state single article rate, which is a flat 2.75. You can see here there are a couple of exceptions too in Tennessee for that local limitation. In Hamlin County, that local limitation is up to 300, and in Hancock, the limitation is 375. So as far as I know, Tennessee is the only state that has this single article. If you're a car dealer in Tennessee, you're used to this. It's kind of weird, but because vehicles are usually over this 1,600 amount or a high dollar item, it's going to be subject to single article. If you're a dealership from out of the state of Tennessee that is viewing this webinar or here with us today, you're like, what in the world is this? It's probably new to you or you don't understand it, but it is a little bit confusing. I recommend that you definitely check that webinar out. And again, when we look at this bill of sale here in the next slide, we're going to break down how this single article applies. A few other things about single article: parts and accessories for motor vehicles are treated as part of the unit and not separate articles if they're installed at the factory and delivered as original, if they are installed by the dealer or distributor prior to or at the time of sale are included in the sales price, or if they are installed prior to the sale because of a requirement of state or federal law. Another thing real quick about single article, the single article cap also applies to the lease of motor vehicles. For the most part, and generally speaking in Tennessee, when we talk about a sale of something, when it comes to sales tax, that also includes the lease and rental of that item. Sale, lease, and rental can all be kind of lumped into one. But with leases, if the motor vehicle is worth $1,600 or more, only the first $1,600 in lease payments are subject to the local option tax. The next $1,600 is subject to the state single article, and any lease payments received greater than $3,200 are only subject to the standard 7% state rate. All right.
Katie moves to the next slide titled Calculation Example, with a subheading explaining that the customer is located in Davidson County and received a $5,000 rebate. On the left side, a bill of sale lists the vehicle price, fees, trade-in value, taxable and non-taxable items, taxes, and the final total due. On the right side, a tax calculation table shows how state and local taxes are applied to the vehicle purchase under Tennessee's single article tax rules. The example illustrates how the final amount due is calculated.
This is where the rubber hits the road here. We're gonna break down this sample bill of sale. And if you need to, I know this is really small print, but just to be able to get it all on one slide, you may need to click on the plus sign to zoom in. So we're looking at here, this bill of sale is for a customer, and the sale is in, that should say the sale is in Davidson County. 2.25 local rate. The customer did receive a $5,000 rebate. So let's look at how this breaks down. I'm going to zoom in on my own screen too. We've got a vehicle price of $35,000, and what we're looking here in this whole first area is what is going to be that's the total sales price. Okay, document fees, we just discussed that, business tax included in there, prepping fees, and we've got that like kind trade-in listed here as taking $10,000 off of the sales price. So all of that stuff without the $10,000 trade-in would have been $35,300, but we took that $10,000 off, and our total sales price is $25,300. All right, jump over here to the single article local tax calculation. So we're going to base this on that $25,300. That's the total sales price. That whole amount is taxed at the state 7% rate, which equals $1,771. The first $1,600 is subject to the local tax, which in this case, Davidson County is 2.25, so we end up with $36 there. The next $1,600 was taxed at that state single article flat rate of 2.75, $44. So our total tax due on the vehicle sales price, there's some other things later on down here, but just this on the vehicle sales price, subject to that single article calculation, total tax due is 1,851. So, okay, we've got one line on, I got that part figured out now. Going to move on down here a little bit to some other taxable items. Now, these are items subject to tax, but they weren't included up in the bill of sale. I'm sorry, up in the sales price. These are taxed, but taxed not based on single article. Extended warranty of 3,000, so that's going to be taxed at that 7% rate plus the entire amount taxed at the 2.25 local rate. This is what we're used to seeing items taxed at. Anything you're going to buy other than single article items are just state rate plus the local rate for the entire amount, right? So for that extended warranty, that's taxed at the 9.25% is going to be $277. You got that total. Roadside assistance is a taxable service in Tennessee, so that's going to be taxed at the state and local rate. Paint protection, same. That's a taxable item, but it's not going to be rolled up into here either. So it's taxed at the 9.25%. So those items, we've got a total tax due on some taxable items that were not rolled into that sales price. All right, also on this bill of sale, we've got some non-taxable items. That gap insurance that Billy was talking about a few slides ago, not subject to tax. Finance charges, title and registration. Here's where we're going to see this rebate. The rebate, that $5,000 was not taken off of the sales price up here, but it is taken off of the total. Think of a rebate as almost like they're making a payment. It's treated the same way. So we've got total column here of this was the sales price. These are those taxable items. These are items that are on the bill of sale, but that are not subject to tax for a total here. Hopefully that helps you a little bit. If you have a question about an item on your bill of sale that you may not see here, our manual does go into a little bit more detail about some other things that might appear on there.
Hey, Katie.
Yes.
Something real quick. Hang on a second. Yeah, I was going to just say one quick and easy way to calculate sales tax, and this is just a rough way of doing it if you're ever thinking about it, is total price, whatever that is. And of course, you adjust it as you have pointed out here, times 7%, right? Okay, that's state sales tax. Your local tax is somewhere between a small amount of money, maximum of $44 at a 2.75% rate. And then that local single article tax can never be more than $44. Okay. So a lot of people, just layman's term, will take 7% plus local plus $44 if that car exceeds $3,200 in value as the sale price, right? And most cars are going to sell for more than $3,200 these days. So it's an easy way of thinking about it. So state price, 7% state plus local plus $44 is a general way of kind of doing that just real quick off the top of your head.
Good point. Yep. And the reason he said that this amount won't be, the local limitation won't be more than 44 is there are no local jurisdictional sales tax rates that are higher than 2.75. That's as high as they go. All right, repossessions. This used to be a very confusing topic for me, but it's been made a lot easier recently due to a new tool we have. So a dealer who repossesses or enforces a lien against property the dealer has sold on which there is an unpaid balance of greater than $500 can deduct on their current sales and use tax return an amount equal to the unpaid balance minus $500. The amount of unpaid balance does not include interest, carrying charges, or other similar charges. The dealer must document the credit by maintaining records. We're going to make that easier for you here. I'll tell you about something that makes that easier. The dealer must document the credit by maintaining records of the parties and items involved, dates of the sale and repossession, the original purchase price, the amount of unpaid balance. Dealers who have sold or assigned the security agreement to a financial institution without recourse to the dealer cannot claim a repossession tax credit. Let's see here. So we have this new resource. It's a worksheet. Thank God. This is so amazing. When I first learned about the repossession credit and tried to figure out how to calculate it, it just, my mind got so tangled up. If you are a dealer dealing with this or a CPA or bookkeeper dealing with this, you know what I'm talking about, right? Well, good news. We've got this new repossession credit calculator. On the next slide, I'm going to walk through an example of it, but I'm going to show you, you can see a link to it here. You can get to it by a couple different ways. Let me take you over there. Let me share the web browser. At the revenue homepage here, you can get to this calculator by clicking on taxes, or you can click on the taxes tile. Here, let's click on the tile. I'm going to go down to sales and use tax. And to find the calculator, you're going to click on forms. And it is down here somewhere, but I'm going to show you a little trick. If you didn't already know it, you click Control F and type in calculator, and there it is. It's towards the bottom of the list, repossession credit calculation. Not calculator, but calculation. I'm going to click on that. And it actually, you see here, it opened up, it downloaded something for me. It's not an HTML link. It actually downloaded an Excel worksheet for you. Let's just open up that worksheet. Hopefully it doesn't take forever.
Katie navigates to a Tennessee Department of Revenue webpage to demonstrate the repossession credit calculation. The screen shows a web browser with the state website open. Portions of the page are obscured or grayed out due to privacy settings, limiting the visible content. Katie continues the demonstration by verbally describing the navigation steps and explaining the process to users. Links available upon request.
Okay, so you should see it now. This worksheet, it has lines for sales date, the repo date, reporting period, VIN number, account number, customer name. Those are those records we need anyways for repossessed items. So here they are. You can do a
Okay,
spreadsheet for this.
Katie.
Yes.
For whatever reason, I'm just getting a gray box on my side, so that
Oh,
I
okay.
may not
Okay.
be able to see this sheet, but the link is available, like Katie is saying, on our
Yes.
website there.
Okay.
So I just thought I'd let you know because I wanted to make
Thank
sure
you.
Katie advances to slide 12, which shows a screenshot of the repo calculation spreadsheet. Green, yellow, white, and gray color-coded columns, circled cells, arrows, and callouts highlight where users enter required information and where calculated values appear. The slide also notes that the spreadsheet can be saved and uploaded as a supporting documentation for a return.
do that.
I'm actually going to show you a zoom.
Yeah,
On the
there you
next
go.
slide, I'll
There's a
show you what it
picture
looks
of it.
like. So
Sure.
there you go.
Thanks.
Before I get to that, thank you for letting me know so that I didn't just continue on yapping about something y'all couldn't see. Important notice 2315 here. There was a new law that passed last year. As of July 1, 2023, the repossession credit is available to a dealer who principally sells used cars, collects down payment averaging not more than 5% of the automobile sales price, and assigns 100% of its security instruments to an affiliated finance company, advances from its own funds the sales tax amount on each purchase, excuse me, and reimburses the finance company for the sales tax of the company if the company is unable to collect from the purchaser. This public chapter also requires the taxpayer to receive confirmation from the Department of Revenue that it meets the above criteria before utilizing the credit. That is for like the buy here, pay here companies. Check out that notice. All right, so here is an example of using this repo calculation spreadsheet. I zoomed in here. What you don't see is what I was telling you. The first few columns here allow you to put onto a row the customer name, the VIN, the date of the repo, all that. So we're keeping record of this easier for you. So I zoomed in here, and if you want to use the zoom, the plus sign zoom in function here, just to get a little bit more, I'm going to. These first 4 columns that are in the actual calculation part are where you need to enter information. There's only 4 places that you need to enter information. You enter the taxable sales price, the down payment amount, the amount of principal paid, and then that required reduction, which is $500. Then the spreadsheet does the math for you. It's fantastic. Let's see here. There's one other thing that you need to actually do when you're on here, and that is you have to choose the local tax rate. So you can't have a circle over it, but this select local tax rate, that's another area where you have to go in. There's a drop down. So it's pretty simple. So you'll have to know the local rate. So in addition to entering these 4 items right here, you also have to choose the local rate, and then the system does its math for you. The spreadsheet does. So you're going to enter the amount here that you see on Schedule A, line 8, and it says it right there in the description of the column. The amount here is where this is the local credit base for a single article. This is where you're going to enter in that information on Schedule B, line 2. And another amount to enter in on Schedule A, line 9, and Schedule B, line 2. And then you're going to see it's going to calculate your total amount of tax credit. So if you have one vehicle that has been repossessed or multiple, they can all go on this same form, and you can save it and upload the whole thing as required, as non-required, but as supporting documentation. If you don't upload it with your sales tax return, that's okay. You still need to retain this for your records, or I would suggest it. Very helpful. So you can load it and save it up into your 10-tab return. Don't have to. Fantastic work there on whoever made this repossession calculation spreadsheet, though, because I would venture to guess that a lot of people before this were kind of possibly even doing it wrong, because it's very confusing. Happy to have that available to y'all.
Katie advances to slide 13, titled Common Exemptions. This slide contains a bulleted list of exemption categories, including government, nonprofit organizations, agricultural, motor carriers, military, and 3-day removal. Brief notes explain documentation requirements for each exemption and highlight a callout that reminds users that leased, sold, or transferred vehicles are not exempt if the ownership changes.
All right, we're going to move on here to talk about exemptions for just a minute. There may be someone that comes in to buy a vehicle from you and they don't owe tax on that vehicle. Here are a few examples. Government. You're going to need a fully completed, if they come to you, if someone from the government comes and wants to buy a vehicle free of sales tax, they're going to need to present to you a copy of the Tennessee Government Certificate of Exemption form. You can see a link there to see what it's going to look like. It's a form that they can fill out, and a streamlined certificate of exemption. Very important here. If someone with an exemption is coming to you to use their exemption, and they have an exemption certificate or whatnot, or can prove that they're exempt, the payment has to be made in the name of the exempt entity or person. That's very important. Same with nonprofits. They're going to need a valid exemption certificate, fully completed, streamlined sales tax certificate of exemption form. You can one thing a lot of people don't know, if you're questioning the validity of a exemption form, you can, now this does not go for government because that's something that they're going to fill out, but most of our exemption forms, you can actually validate a certificate. Go in there and verify, I'm sorry, not validate, you can verify if it's a valid certificate on TinTap. Here's a link right here to go to TinTap, and you click on other services, I believe is what it says, but it's a good tool there. Agricultural, this is important. So ag exemption holders cannot purchase automobiles or trucks using the exemption. No ifs, ands, or buts. But trailers and off-highway vehicles used 50% more of the time on the farm can be exempt. So regular cars, trucks cannot be, even if they're using it on the farm. There's this can be an area of confusion at times. Yes, Billy, something to add on this?
Mr. Annoying here. So off-highway vehicle is still not a pickup truck. It is
Right.
still not a car. It is still not a motorcycle. It could be a tractor. It could be a combine, as an example. Okay, so just keep that in mind. That automobiles and trucks, like it says there in that bullet, can never be used with an agricultural exemption. Okay, that's it.
Thank you.
Thanks.
Thank you. So basically the definition of off-highway vehicles, if it's designed to not be on the road, is one easy way to look at that. And there is a motor carrier exemption, link here to application for sales tax exemption for interstate commerce, motor vehicles and trailers. There are some stipulations there on the vehicle weight, the vehicle usage, and so on and so forth, that could make it exempt from sales tax. All right, in the next couple slides, we're going to go into detail on military exemption and a 3-day removal exemption. Okay, so we're going to break down the military exemption here. Very common in this state for military personnel to purchase vehicle and not owe sales tax. So the purchaser must be active duty, full-time, stationed in Tennessee on the date of the vehicle purchase, either a member of the Army, Navy, Air Force, Marines, Coast Guard, or Tennessee National Guard Reserves, AGR, or Tennessee National Guard or reservist stationed in a current recognized combat zone. And that sales tax exemption can apply from the date of the order up to 90 days after release. So the vehicle must be in the name of the qualifying member or jointly owned, you may have to zoom in here, jointly owned by that qualifying member and their spouse, parent, grandparent, great-grandparent, child, including adopted, grandchild, or great-grandchild. It cannot be jointly owned by the military member and a sibling, a step-parent, or a stepchild. I didn't make the law, we just administer it. This is what the law says. So,
Hey, Katie, one more
yes.
time. Sorry. I'm sorry to keep jumping in on you.
No, I wish people would jump in more on me so I don't have to just listen to me the whole time.
I just want to talk for a second about the Guard members, who, by
Yes.
the way, we appreciate their service, as we do all of our military members. But it's important to know that not every member of the Guard is going to qualify for this exemption. Katie mentions the AGR program, which is a very specific program where essentially what you have there are people who are full-time employees of the Guard. Okay, that's their job. That's what they do 5 days a week. You know, that kind of thing, as opposed to a Guard member that might go to camp once a month and then 2 weeks in the summer. Okay, that's a different thing. And then, of course, in the second bullet there, Katie mentions about Guard members that are actually assigned to combat zones. When you do that, you're equivalent to a Title 10 under the U.S. Code active military member, and that makes you exempt. So anyway, I just want to throw that out there because it comes up quite often. There's quite a few Guard members that think they're exempt, and when we analyze their stuff, it turns out that they're not. And again, this is like Katie says, you know, we're just letting you know what the law is, and the legislature, of course, is pointing us to whatever they think the law should be. Okay,
Right.
thanks.
Thank you, Billy. Military exemptions are confusing too, especially because the orders can be very, very confusing to read. All right, a little bit more on the military exemption. What qualifies? Cars, trucks, motorcycles, off-highway vehicles, mobile homes, house trailers, camper trailers. What does not qualify? Leased vehicles, semi-trucks, boats, and trailers.
Katie advances to a slide titled Proof of Military Exemption. The slide contains a table listing various military documents and indicating whether they are acceptable as proof of exemption on their own or require additional supporting documentation. Check marks, X marks, and descriptive notes help users determine which documents meet the exemption requirements.
Hopefully, I'm not going to go through all this. This is just kind of a slide for your reference. Proof of military exemption, this will let you know what type of document it is, if it's an order, if it's technically considered an order, and if it alone is sufficient for allowing the exemption. A little bit more information there. You can see this might help you. This doesn't help you with actually reading the order once you get it and figuring out where the military member is located and based out of all that. So they're all different. Each branch is different. We have some employees at the Department of Revenue who've become experts at this. A lot of the county clerks have also become experts. If you ever have a question about it, please feel free to reach out to us because those military orders can be very, very confusing.
Katie advances to a slide titled Exemption 3-Day Removal. The slide explains that buyers may avoid Tennessee sales tax if a vehicle is removed from the state within 3 days of purchase. It also highlights that vehicles permanently located in Tennessee do not qualify for this exemption.
All right, here's another exemption is a vehicle that's being sold by a dealership here, but then going to be removed from Tennessee. Tennessee allows the buyer to purchase or lease that vehicle in Tennessee and have up to 3 days to remove the vehicle into another state without having to pay Tennessee sales or use tax on the purchase. This exemption does not apply to Tennessee business tax or franchise excise tax. Just side note there, that we're just talking about sales tax here. Here's a link to this, what we call the 3-day removal affidavit. The technical name is a seller purchaser affidavit of exemption for motor vehicles, trailers, and boats sold for removal from Tennessee within 3 days. 3-day affidavit. And it must be completed in full, indicating the city and state to which the item will be delivered. Very important here in red in the middle of this slide here, a vehicle registered in another state but permanently located in Tennessee is not eligible for this exemption. If the vehicle is going to be stored, used, located in Tennessee primarily, then Tennessee sales or use tax is due on it. So a little bit more on that here in the next slide. You'll need to zoom in here if you need to read details, but we did update this 3-day removal affidavit very recently, just a couple months ago, to add this usage part of the vehicle. And we are really wanting to advise dealers to familiarize yourselves with this 3-day removal affidavit and carefully, keyword carefully, very carefully inform your customers of the details, because you don't want, if your customer is actually trying to use the 3-day affidavit to not pay sales tax, but that car is going to be located here in Tennessee, you need to inform them that that's a serious thing. They're signing and you're signing. You can see if you zoom in here, this is part of this dealer certification and the buyer certification that's on this affidavit. The dealer is saying that under penalties of perjury, that you certify to the best of your knowledge that this vehicle described is going to be used, will be subject to title and registration in another state and primarily used. That is what changed in this most recent version of this 3-day affidavit, is the primarily used. You can only use this 3-day affidavit if that vehicle is going to be used in the other state. Same with the buyer certification. They are also adding in here that they are stating that this vehicle, if they sign this affidavit, that it is going to be used and operated in another state. It's not too hard for our auditors and SI to prove that a vehicle is being used and operated here. So you just want to make sure you're very carefully informing your customers of what they're signing when they sign this. And Will,
Hey,
Binkley, you
Katie,
wanted to add to this,
I was about
right?
to hop in. Just like Katie said, these changes in the 3-day removal affidavit ensure that your customers know that to receive this tax exemption, that the vehicle must be physically removed and primarily used in another state. Not only will this will help educate Tennessee residents who purchase vehicles through a Montana LLC that the vehicle must be physically removed from the state of Tennessee, not stored or used in Tennessee, but it must be out of the state to receive that tax exemption.
Great, thank you, Will. You know, it might be a good idea for you dealers, if you see that your customer's trying to sign this affidavit and use the 3-day affidavit, but they have a Tennessee driver's license, that might be a red flag. If that's the case, good chance that might flag an audit. Possible prosecution and up to 100% civil fraud penalties for this failure to abide by this removal of the vehicle into another state. Very important there.
The presentation moves to a slide titled Out-of-State Dealerships. The slide explains that out-of-state dealerships with Tennessee tax nexus should calculate sales tax based on the customer's address. A map of Tennessee counties is displayed to illustrate local tax rate lookups, and links to additional webinar resources on Nexus and out-of-state sales reporting appear below the map. Please contact the Revenue Agency for links.
You out-of-state dealers that are on here, don't want to rush through this too much, but just to let you know, we do have some resources specifically for you, a local rate lookup map you see here link. We have a webinar that's specifically on Nexus for out-of-state businesses and reporting out-of-state sales by delivery destination. That's if you're selling a car in another state, but it's getting delivered to a customer in Tennessee, it's the sales tax is going to be based on where they live in Tennessee. That's where that local rate lookup comes into play. So a few other things that we're not going to go into today that you can get more information on in this automobile dealer webinar is loaner and demo vehicles, parts and service and repairs, detailing of vehicles, and bad debts. Okay, just a few things, and I don't mean to rush through this, but I want to leave at least about 10 minutes for some questions that you might have. Some business tax issues. Sales of extended warranties by auto dealers are taxable at the retail rate to the auto dealer on the commission portion of the sale. Now, just a note there, sales of extended warranties by warranty companies, by an actual warranty company, those are exempt from business tax, but your commissions, if you're a dealer and you're selling a warranty, then your commission portion is what is taxable for business tax purposes. Just a reminder, we've switched gears here. We're talking about business tax, not sales tax. A couple more business tax issues. Sales of parts and services by an auto dealer to a warranty company are considered wholesale sales for business tax purposes. Car services and repairs, as well as service contracts, are taxed at a regular retail rate. And taxpayers making conditional charge or installment sales must report the total selling price of such sales and pay the appropriate business tax due in the reporting period in which the contracts of sale are entered. So not to when they're completed, but when they're actually entered. A few deductions that are common for car dealers when it comes to business tax are cash discounts, trade-in allowances, repossessed goods, and sales of tangible personal property in interstate commerce. If you want more information about each of those things, we have a great webinar that's going to detail how you would handle each of those situations on the actual business tax return. It's a webinar dedicated to filing the business tax return. So, all right. Well, if I could get the panel to come back here with me, I'm going to go ahead and turn on the chat. Attendees, you can send any of your questions now to our panel.
We will be happy to try to answer in the allotted time, and those that we don't, we'll be giving you the way to reach out to us and let us answer your question. Absolutely.
That's right.
Just looking at some of these coming in here.
Yep.
Susan, I'm gonna address your question since we were told to jump in whenever we need to. And others, please correct me. But for this item, if you purchase those seat covers or those whatever item you're giving away to your customer, if you purchased them exempt from sales tax, you presented your sale for resale certificate to whoever you bought them from, then you would owe use tax on just your cost of those items. You're free to give away whatever you want, but ultimately somewhere sales or use, which is kind of the other side of sales tax, has to be paid to the state on at least the minimal cost of that item.
Hey,
So
what was the question here? Is that the
I'm
question
so
just came
sorry.
into us? No, that's okay.
I'm sorry. It says if you are giving away items and charging to COS i.e. seat covers, bumper guards, would these be subject to tax? We've not increased the sale price to charge the customer. So in short answer would be they would not be subject to sales tax because you've not passed it on to the customer, but you would be subject to use tax, and that would be reported on either line 2 or line 3 of your sales tax return. You'll notice there's gross sales, then there's a line for items imported from out of state, and then there's another line for items used in conducting the business. You would list the cost, your cost there.
And I like how you worded that, like at some point down the line, at some point, tax has to get paid. So
Mhm.
yeah, if you're using your resale certificate, then you either pay use tax on it, or you're going to charge, or the
The
customer's
customer.
going to pay sales tax on it.
Correct. Correct.
And I have a question for you. What do you mainly see in the field with car dealers? What are the main pain points that you see, or things that they get confused about?
Um, uh, eh, one of the main easy things that I spot almost on all of my car lots, or many of my smaller car lots, is the difference in the definition of an interstate sale for business tax purposes and for sales and use tax purposes.
Mm,
Um, I very consistently see the same amounts being exempted from business tax for interstate sales as for sales and use. And um, dealers need to understand that the business tax is a privilege tax. It's a tax to you, the company, for the privilege of getting to do business here in Tennessee. So if that customer comes to you, looks at that car on your lot, says, "Yep, that's the one I want it right now," and gives you a 3-day affidavit because they live in Kentucky. The privilege was they came to your place here in Tennessee. It doesn't matter where it goes after that. They bought it in Tennessee, so you owe business tax on it. Period.
right. Now, if they were
That's
going
a
to
big one.
deliver it if that car was
If
going to get
they
delivered out of
if
state,
they
then it would
deliver it, then it's a whole different. I have
Mhm.
had customers, I have had taxpayers that determine that correctly, or they deliver outside the state, and that can be either on your own car haulers, or if you contract with a third party. Um, as long as it is you contracting with the third party, and not that, again, the customer from Kentucky has come to your lot, has looked at it, has said, "Okay, I want it delivered. I'm going to have my cousin Joey come down and pick it up for me." You didn't contract that. You didn't ship it away. The title transfers. The If it gets wrecked on the way home because Joey ran it off the road,
Mhm.
that's your buyer's problem, not yours. So that's another way you can kind of look at it, is when does it not become my problem?
Right.
It's still your problem until it gets all the way to the guy in Kentucky. Then yes, that's a true delivered out of state interstate sale.
It's interesting that you bring that up, because just the other day when I was preparing for this, I was thinking, well, for sales tax, for when a dealer uses, when a customer buys it and uses the 3-day affidavit, they're not paying sales tax, right? Well, where does that go on the sales tax return? Because it's not a sale in interstate commerce, because technically a sale in interstate commerce, like you just said, is when it's being delivered outside of the state, delivered to
Right.
somebody that lives in Kentucky or wherever. But there was a little line in the instructions for the line about the interstate commerce exemption. Does say that that's where you put. Does anybody know off the top of their head what line that is on the sales tax return? I don't think I have a note of that. I thought I made note of it, but I don't. But anyways, that's where those sales, where for sales tax, when a 3-day affidavit is used, it goes on the same line item as sales and interstate commerce. So just piggybacking on what you said there, that's how
Correct.
that gets reported.
Hey,
Mhm.
Katie, can we get Will to address the 3-day removal affidavit requirement? I think he had maybe a comment on that. If you don't mind,
Yeah,
Will.
I saw that question. I think the answer to that question is yes. All customers that are from out of state need to have signed the 3-day removal affidavit. And Anna, when you go in for an audit, what are you looking for on those 3-day affidavits? And what's the effect of not keeping the 3-day affidavits?
So we are looking for it to clearly identify, you know, the VIN, the vehicle description, the date of sale, the seller, the buyer, where the buyer has removed it, and has it been signed. And then bottom line, when I don't have those items on this piece of paper, then I'm saying it is not an exempt sale, and the dealership is going to be liable for the sales tax on that, whether they collected it or not. They should not have allowed it as an exempt sale. And the dealership always has the right to go back to their taxpayer and try to collect that. Um, I've not historically seen that because it creates bad will between your customers. So, um, but at the end of the day, it's the dealer's requirement to obtain these items at the time of sale, because otherwise, how do you know they're exempt? If they haven't provided you with what we're requiring, their word, your word, I'm sorry, that's just not sufficient.
I think that covered it all, Billy.
Yeah, I think that it's not uncommon for people to try to get out of paying sales tax sometimes. And you dealers that are on here, help us help your customers not end up in an audit, not end up in a situation where special investigations or audit are coming after saying, hey, how's this really being used? Is this being used properly? Whether it's an exemption, whether it's a farm exemption or a 3-day removal affidavit. I think that it would be great to have dealers who are helping their customers and also, like I said, helping us make sure that everyone's in compliance and kind of staying above ground on that. Since nobody wants SI or an audit to show up, right? No offense, Will or Anna, we love y'all, but
Katie,
nobody wants to show you.
also had, I think it was Karen that had a question in chat about motorcycles being a motor vehicle for trade-in purposes. Yes, per that slide and the information in the dealer guide, motor vehicles can be lots of different things, like boats or motor vehicles for this purpose. Okay. And like Katie said during the presentation, we're not telling a dealer that they can't take something as a trade-in. We're just telling you whether it qualifies for sales tax deduction or sales price reduction
Mhm.
based on whether it's a qualifying item for that purpose. I mean, I've seen different dealers with the commercials on TV that will trade for anything and that kind of thing. That's fine. You can do whatever you want, but we're just telling you that it's got to be a motor vehicle in order for you to take that away from the sales price. Okay.
So if someone was trading in something not like kind, uh,
A diamond ring.
firearm or a
Firearm.
diamond ring or something like that, then it would go just down here, same way as rebate. It would just come off the total price, but it would not come off right here. It would not come off in the price of the vehicle. What we're looking at right here, that would, like the trade-in of like kind does, but a trade-in of non-like kind would be treated just like a rebate or like a payment that they're making.
That's right.
Mhm.
And that's a
Well,
question we get a lot from the clerks when they're looking at paperwork. They're like, I had it last week. They wanted to verify, someone had traded a boat for a motor vehicle. And we're like, yep, like kind. So they can do that. But yeah, that's a popular question because we
yes.
deal with the county clerks, and that's a question we get a lot.
Yes, thank you, Miranda.
Because we've gotten dozens and dozens of very good questions, and we're not going to be able to get to all these. Katie's going to show the help desk email
There we go. Oh,
again.
here we go. Yeah,
So
since we've
we
run out
didn't
of
get
time
your,
here.
we didn't answer your question. Make sure you send us an email and you will get an answer very
That's
quickly
right.
too.
Revenue.support@tn.gov. If it's title and registration related, we can send it over to Miranda's team. If it's sales tax related, business tax related, we can answer your questions by email that way. You can always feel free to call us. This is our tax general call center, 615-253-0600. A few other great ways to follow us and stay in the know with the Tennessee Department of Revenue there. Real quickly, just some things we've got coming up next month. One of my favorite webinars of the year always is our legislative updates webinar with our special guest, Jeff Foster. In August, our monthly webinar will be on the Retail Accountability Program, or RAP program. Here in just a few weeks, we have another new business workshop coming up on July 7th. You can get to the webinars and the new business workshop by going to tn.gov/revenue and clicking on Taxpayer Education and Outreach. As you're exiting, make sure you take the survey and give us some feedback. If you have any ideas for future webinars you'd like us to cover, please put that there. And if you need CPE credit, you have to answer yes to that question on the survey. And thank you all so much. Anna, Will, Miranda, thanks for being here with us today. Appreciate all y'all signing on with us.
Happy to help.
All right.
Thanks,
Well,
everybody. Thanks for
have a
joining
great
us
day.
today.
Talk to y'all later.
Bye.